Hello. So this is a mic test. Hello guys. I hope you guys are doing well. So before we proceed, I'll take a few seconds. I have shared the screen and if you can hear everything fine, I will appreciate a heads up in the comment section. Last time we had certain small issue with the audio and there was some hissing sound or something like that. So okay, the audio is looking fine. Let me change the Wi-Fi here. Okay, Peter, thank you for the confirmation on YouTube. Okay, and because we have a confirmation now, also just one more thing, if in the middle something changes and the audio gets bad, just give me a heads up in the comments. Okay guys, looks like all is set here. Just give me 1 or 2 seconds and then we'll begin with our 16th webinar. That's it. So today is 23rd December 2022 and this will be the 16th webinar in the series of these trading opportunities webinars that I've been doing. My name is Nirav, and before I get ahead with the disclaimer, with introduction, let's first head over and check the disclaimer. So as you can see on screen, the disclaimer suggesting that all content presented here will be for educational purposes only. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purpose, you yourselves will be liable for your profit, loss, or loss of profit. Rest you can just go ahead and read yourselves. So with that out of the way, let me give you a quick introduction here. So my name is Nirav Yadav and I'm the admin and owner of this website called 50 Eyes Market Analysis, where I present my views and I have been doing so for 7+ years now. I also have this YouTube channel called 50 Eyes Market Analysis again. And this webinar is broadcasted live on YouTube as well as my TradingView handle. So you can watch it whichever place is convenient to you. Thirdly, about my work, I have this book, Think with the Market, Secrets to Achieve 80% plus accuracy with Elliott Waves, which is again based on Elliott Wave, which is my area of expertise. And one more thing before we go ahead with the actual webinar, I would like to show off this track record of 6 years thus far where I have had 80% plus accuracy. The reason why I show this is that in this industry of trading, even accuracy of 60% plus is considered very high. And here I have near 90% plus accuracy for 6 years plus. So as you can see in 2016, whatever public broadcast webinars I did, the compilation of all of it had an accuracy of 83.34%. And in 2017, if we scroll up, we had an accuracy of 87.5%. And 2018, 84.61. 2019, 84.88, and 2020, 88.52, so on and so forth, 2021, 82.22. We have not yet compiled for 2022, but 6 years is way too much in itself, I would say. So this is just again to show you that how expert I am in my chosen field of work. Okay, guys. So with that introduction out of the way, and yeah, one last thing. I also have courses, video course on Elliott Wave, personal classes called Training Program LT, and the course based on the book called Think with the Markets course. So yeah, let's get that out of the way and now discuss about the webinar. So these webinars will have the standard format where first I will discuss Euro USD followed by EURCAD, USDJPY and EURJPY, which will be followed by crude, gold and S&P. And lastly, we will cover Nifty and Bitcoin, right? So by the way, if you are looking at this is the article posted on my website after the webinar. You can check it by visiting my website and scrolling down. The 16th webinar will be here. Or you can also click on market analysis and check out all the past articles. Basically, the article format for the video embedding. Okay, so now that is all out of the way, introduce cast by wave theory. So as I said, my accuracy, forecast accuracy, I think you missed it. I started doing it since 2016. I even showed a 6-year track record. It looks like you were late. So if you want to check, you can just visit this link 50is.com/forecast accuracy and check all the past forecasts. I've been doing this since 2016. So with that out of the way, let's first start off with the first thing which we discussed, which is Euro USD. So let me quickly load that up on screen. There it is. So here is the chart of Euro USD, guys, and last time when we discussed it, nothing really seems to have changed on this counter, at least, right? By that, what I mean is that previously when we were discussing Euro USD, the view was that this whole correction which started from this point of reference is complete already. The point of reference was around 0.954 and date was 28 September 2022. So this was the correction which I have on the chart already, but I'll just remove that and show it over here. Okay, so if this correction is correct, that is if discount is the market is the one the market is following, then we should see some downside. Nothing like that has happened thus far. So we can wait for it to either do that or we can wait for it to invalidate itself. And as this market is forming more and more sideways movement, I'm seeing that or I'm thinking that this count may get invalidated very soon. So there are some counter views that I am thinking of right now, and pretty much all of them still involve the market giving some correction, at least a small leg down. So that's why I will avoid discussing them, at least at this point in time. And right now we'll still continue our discussions with the same counts. So if you guys are not familiar with the Elliott wave, let me just quickly run you down with this pattern. This is called a WXYXZ triple zigzag pattern, and in the Elliott wave terminologies, a triple zigzag pattern roughly looks like this. Very quickly, I'll do it because there are a lot of people who follow these webinars regularly. So this is what we call W up, Y up, and Z up, and all three waves are joined by connecting wave X, connecting wave X. Now, if you look at it on the actual chart, again we have the W up, Y up, Z up, and the connecting wave X, the connecting wave X. So if this is the formation, then as I said, we expect some downside at least in this market because I am having some other views. So nothing really has changed here. So I'll just say that keep following this count until we get something new or some basically some new price action which makes us to change this count or completely remove it. So that's about it for the chart of Euro USD. I'll just wait a few seconds. If you have any doubt, guys, you can just type that in the comment section. If not, then I will appreciate if you can just type in clear. That way I will know that everybody is on the same page. If not, then we will move on to the next chart, EURCAD, which will be HD picture showing is I set the high no showing chart. So I am sharing the charts. Prashant, can you refresh the screen and again change your quality to 1080p? Because it should show you high quality charts. I mean, if your internet connection is really bad, then it can be a problem. But otherwise, it should be showing you high quality because the stream isn't 1080p and I'm also observing it on the YouTube app I have. Okay, guys, so it looks like there is no issues with the discussion we had on Euro USD. Let's head over to EURCAD. So as we discussed in the last webinar, we were following this count where we had the point of reference around 1.3274, and from this point of reference our initial analysis was suggesting that we have a zigzag in the upward direction. Now I've mentioned that multiple times that this count looks very weak, and I was not really interested in taking shorts when it broke the channel, and it is still actually a technical short, and I still haven't taken any trades because, as I said the last time, unless it takes the trigger line which is at 1.437, I'm not really interested in taking shorts on this one. So the position still holds. Technically it's a short, but because the targets are very small, the first target around 1.438, 43898, and the next one around 42644. So the targets are not that big, and the position looks not that strong for bears as well. So I'm just not interested in taking any positions, at least now, on this counter. So it's still a wait and watch on this one on EURCAD. But technically, if somebody is interested in the risk profile, it's a technical short, but no trades for me, at least on this one. So nothing new. Let's move ahead to USDJPY, and I seem to have some questions here. Looking forward to Euro USD insights. Radu, I already discussed Euro USD. Like it was the first thing we discussed. And we correct in early January, and which could you use for currency trading? I'm working with prop trading firms for currency trading, and not sure why people keep asking the broker every time. So where was that? Yeah, with Euro USD, my view is that the downside is not primarily. I'm thinking the downside is not going to be very huge, and we will have to correct the or update the counts. So we will take 1:1 or ABC kind of correction as such. Let me just quickly run you down again. So I'm thinking that only maybe minor 1 lakh down is remaining here. So we'll just go with our minimum target of 1:1 here. If that is exceeded, that is, if the market goes till this much or something, then we will say that yes, it is probably going to fall further. The reason for the shift is that this market is not really behaving in the way it should have after the completion of the triple zigzag. Anyways, you can check the previous discussion on USD in detail later on as a recording. So anyways, let's move ahead with our next chart, which is a chart of USDJPY. So in USDJPY, we last time discussed that there is an updation of the counts, right? And the updated counts were that the triple zigzag is still continuing. So as such, I still don't have a confirmation of this. Some news events are incoming. Red. Past. Okay. So as I said, the confirmation is not here for wave Z. As such, we can say that technically it has given the minimum 3 legs down. So let me just run you down in case you are not very much familiar with Elliott waves. First thing is that from this point of reference, we should see a zigzag pattern in formation. Now, a zigzag will look something like this: a down leg, then a correction to the upside, and then another down leg. Excuse me. So in this particular case, we already see that. So the minimum requirement for this is over. Okay. But on this particular chart, this price action is not looking very bullish to me. It looks like it is part of a corrective structure. And because it's part of a corrective structure, it is suggestive that maybe this market will form a downward move from here. So that's why I'm not interested in taking longs. And if we look at it from what you call Elliott wave perspective, we can always say that this market is forming a little bit more elongated wave Z, and hence it will give a little bit more down move before any further up leg. So no longs on USDJPY. EURJPY will be the next chart. It's still a wait and watch until we see some confirmation from price. So I'll just take some questions if there are any. If you can just type them in the comment section, and I'll wait for a few seconds here. Okay. Let's move ahead with EURJPY. If there's any question, you can just type that as well, or just type in clear in your comment section. Let me just quickly check on TradingView. How's the stream going there? Well, it looks all right to me. So 7 seconds delay, I believe, at least from my screen, it looks like on TradingView, and even more on YouTube. That explains why the questions come in late. So anyways, let's move ahead with our next chart, which will be the chart of EURJPY, Euro against Japanese yen. So in EURJPY, again, we see a similar kind of formation, but here I presume that things can get a little bit more bearish. And the reason is that from this point of reference, which is around the price of 148.31, we seem to be having a completion of a diagonal. So at this point, we have a diagonal completed. And I discussed that in the last webinar on the weekly chart, so I'm not going to repeat myself again. But a diagonal completion is an important pattern completion, and once an important pattern is complete, we should see some correction. It can be substantial. We expect it to be a little bit bigger, at least from what we see right now on screen. So my current counts suggest that we have from this point a possible impulse in the downward direction. It could just be a three-wave correction as well, but I'm taking it as an impulse because the first 1, 2, and 3 and ABC will have the same direction. So focusing on this particular structure, what we have over here is that first leg looks like a possible leading diagonal to me. So that's how I have labeled it as such. And in Elliott wave terminologies, a leading diagonal is basically a wedge kind of a pattern when you draw price action trend lines and they converge. It's called a wedge, and in Elliott wave terminologies, there are certain guidelines which are followed. It's called a leading diagonal. So once this particular diagonal is complete, we have labeled this as wave 1. Then we have a correction here, labeling that as 2. And then we have the wave 3, which may have completed here, but I think it has more downside remaining, so I am pushing it over here. And the internals of wave 3 will always have 5 waves inside of it. So those of you not familiar with the lead wave, again, I'll just like to point out that an impulse moving in the downward direction would look something like this, which is what we label as a 1 down, 2 up, 3 down, 4 up, and 5 down. And in this impulse in the downward direction, we will have fractal nature of a lead wave illustrated. So by fractal nature, what I mean is that waves 1, wave 3, and wave 5, they each will have 5 waves inside of it. So in that sense, if we magnify this wave 3, we should see something like this. So we should see something like this, and we can label that as Roman 1, Roman 2, and 3, and 4, and 5, right? So again, we can label this as a 1, 2, 3, 4, and 5. So that's the reason of doing things as I have done over here, and that's the expectation of this market. EURJPY. Basically, what I'm saying is that I'm expecting some more bearishness in this market, and bearishness will be in the form of wave 5 down, as we discussed on the counts. Let me just push out some possible reversal zones here. So it looks like this market. Let me just delete everything here and clarify things for you. So it looks like this market can reverse from this price level around 141.488, which is the expected reversal level for wave force. And because that is the expected level, we will watch out for price action near that wave 4 level. Once we see some bearishness, I personally will be interested in looking out for some shorts over there. So that's the additional point on EURJPY. We have a price level where we expect the market to form some sort of reversal, and we have a count which is favoring the bearish side, at least for now. Now the counter view on this one is that if this market goes above this level of 141.488 and it takes this level as a support, that is the price action remains above this level and the market comes down, corrects, and then goes above it again, that is does not penetrate it to the downside considerably, then we will have to change our views. So long story short, if this market, let's just say, goes to 142.48 something, then that will be the time where we will have to redo this count and reevaluate the positions. Nothing too complex here, and so far following the plan as we thought it would. If there are any doubts on this particular chart, I'll just take them. If you guys are clear, again, I would appreciate if you guys can type in clear or understood. And one more important thing, that if you guys are liking this content, and do keep in mind it takes a lot of hours of preparation and hard work basically to come up with these webinars and do them publicly. So then what we want is to see more and more viewers coming as joining in. Therefore, I request you to hit the like button on YouTube, and if you are on trading, you hit the rocket button there. That way we will have more reach. Okay, so let me see if there is any question. The 0 to 10 line confirmation of VCO start of X 0 to 10 line broke. You know, ABC or start of wave X. 0 to 2 trend line of what? There is no 0 to 2 trend line of any significance here. And generally it is the less significant structure. So anyways, let's move ahead with our next chart, which will be the chart of crude oil. Let me first load that on screen. So this is the crude oil chart. 2336. Yeah, one more thing, guys. When you post a comment and when I read it, there's a lot of time difference, because first of all, these webinars get delayed. When I create the feed, it reaches you 15 seconds or maybe something more, sometimes some more time later on. So your comments sometimes don't make sense, and sometimes they actually are not making sense because the question is incorrectly put. So anyways, if you can clarify more on what you were trying to ask, I'll be more than glad to answer it. So with this chart of crude oil, as you can see, it is following our game plan. And our game plan, as we discussed last time, was that we were expecting the market to go higher, right? And we were expecting it to form this wave C. So we have already caught this up leg so far, right? And it continues to go higher. But at this point, I have to point out one more thing here. And that one more thing is that there is a possibility that this market may not reach our white resistance zone, which is around the price region of 82.15, let's say, to 84.85. So it may not reach it because there is another possibility incoming, which is the possibility of the diagonal, as I have just pointed out on screen. And with that in mind, we will remain cautious and basically longs should start trailing. I know that our entry does not give us much of a room for big profits, but this is a counter trend trade, so you shouldn't expect any big profits here as such, right? So crude oil, following our game plan, I just discussed some new what do you call outlook or new analysis on this one. But so far longs are still intact, but keep trailing it. As I said, it may not have too much upside remaining. In the case of the diagonal, it can simply just reverse from the current price action as well, or just touch this white trend line and then reverse. Do keep this new outlook in mind and keep following the game plan. And by the way, guys, if any of you were able to catch crude when we first were able to forecast the move beforehand, then you can just type that in the comment section. That would be nice as well. Okay, so that was my take on crude, and next will be the chart of gold. Again, guys, a little bit more interaction would be very much appreciated. After all, these are live webinars, not a video recording. No, but unknown for Nifty. I was talking. Am I talking about Nifty here? Look at the chart which we are discussing. Only post questions which are of the chart which we just discussed. Nifty will be the last chart that we will discuss. Suryavansh. No, sorry, I will not be covering DXY. If you are interested, you can just check out EURUSD analysis, which was the first thing we did. And DXY will generally have a inverse analysis of it. They have an extremely high level of inverse correlation. So let's first quickly load gold. So gold is not really doing anything new here. Again, it is following the game plan. Last time when we discussed it, our view was that from this point of reference, which is the price action of 1816, sorry. So from this price level, or which is our point of reference, we seem to be having a possible diagonal in play. And our updated count suggested, by the way, if you guys are not following it, in the past few webinars, we were able to catch these up legs. You can check any of the past webinars, like 3-4 webinars behind. You will see that we were able to catch them much beforehand. Anyways, moving further, what we have so far is looks like a possible diagonal in play. And if the count is correct, then we should see at least one leg higher than 1824, which will basically take out the last high. Okay, so again, as I said, if the count is correct, because these things can change at any point in time, that's why we need to stay vigilant and keep tracking these markets. Obviously, if we are trading them, and obviously, if you know how to properly track them. So, anyways, so with gold, our view still remains intact that if this market is following our count, it should take out this last high of 1824, as I just said, or whatever it is. Just check it on your chart. It is the last recent high. And if we are wrong, then we will know it, because then the market will take out this low around the level of 1766. Right. So rather simple analysis, and it is following our analysis as it is for quite some time, right? So nothing new here. Let's just keep going with what we have. So guys, if you were able to catch what I was saying, I would appreciate if you can confirm that in the comment section by typing in clear or understood. I'll just see what comments I have. By the way, next chart will be of S&P, followed by Nifty, and followed by Bitcoin. See, gold MCX, it almost seems like a workout. Can we relate to it, like say USD. So if you are following it on the MCX, then it is nothing than the same gold which we are seeing. So you can do a simple trick. You can go to XAUUSD and multiply it by USD INR. So you can see the multiple operator is over here. You can just click on it and select USD INR. Then you will have the MCX looking chart, a little bit similar to it. Actually, on MCX, it works only for what you call crude oil. Because I think the weightage we use in MCX for gold is different than the one we use on gold spot. But anyways, you catch my drift. This is the main chart which will be followed over there as well. After all, it's just the same instrument trading in the different currency pair. So looks like everybody's clear here. Let's head our discussion towards the chart of S&P. Rather interesting movements over here in S&P, and S&P, as you can see over here on screen, it is sort of following our game plan, and we will need a little bit more discussion on it. So first of all, in S&P, what we have so far is what we discussed last time is that I said very clearly, if you guys were following me the last webinar. And by the way, again, one more thing I'll just point out, because I'm not sure how many of you guys are following these webinars, and to point out the importance why you should follow these webinars regularly is that we were able to catch all this leg down. All of this move down, we were able to catch, we were able to analyze and predict it beforehand. And a lot of people who are following me were able to even trade it, as you can see in the past webinar comments on, I think, TradingView. Yeah, actually on TradingView on YouTube as well. So that's the reason you should follow every single webinar. Don't miss any one of them. We don't know which webinar we will see the best trading opportunity. So you gotta follow them. And if you are a trader and if you don't want to miss the next best opportunity, definitely follow them. So S&P, now coming to the actual analysis on current time frame. What we have so far is that we are experiencing what we think is a possible triangle, and within that triangle we have a possible zigzag under formation. Now the current chart looks like we have the zigzag starting from this point of reference. So if you follow me on the rough area on the right hand side, this is what we are looking for: A down, B up, and C down. And this is what we have in the actual counts: A down here and then B up and C down. Now the thing is that this B might be continuing a little bit sideways. We don't really have a confirmation of it. So it leads us to a bit of a confusing position over here. Let's see what it's really doing here, or what are the possibilities that we expect this market to do. First of all, this leg up also, again, we were able to catch, because we discussed that in the last webinar, that we are going to see a completion of this fifth wave and then the correction will ensue. So again, we were able to catch the down leg and then the up move. Next thing is that we were thinking that these will be the targets: 3877 to 3908. So the market did go and touch our lower target and did not touch the higher one, but it remained within that range. So it pretty much did our minimum. The bare minimum has been done. Now this down move is a little bit more intense than we expected, which is causing rise or giving rise to two more possibilities. Now the thing is that the first possibility is that this B wave is still continuing sideways. It's not complete here. If it's complete here, then we can even say that the C is complete here, right? So the first possibility I'm taking is that the B is most likely continuing sideways. Once it's complete sideways, then we should see the next leg down, right? So sideways to bearish, hypothesis 1 is suggesting S&P will move first sideways, then bearish. And the second outlook we have, or the hypothesis 2, is that this B is complete here, this C is complete here, and this market will head up for the E wave of the triangle and then down. So this market, if it's heading up, then it will take out this high of what is this, 38.95. So this hypothesis 2, which is suggesting up move, will become activated above 38.95. So pretty simple scenario here: sideways to bearish or straight up. Straight up count we are not going to consider right now unless we see activation above 38.95. So pretty simple outlook here on S&P 500. And by the way, one more point here. I personally have the opinion that the bearish count is of more significance here because the short term as well as long term trend looks bearish. Hence, I'm personally not interested in taking longs on it unless they are very small, like intraday kind of longs. So if you are interested, then obviously do your own analysis. But in my humble opinion, it is better to wait for sell-offs, right? And yeah, one further point of consideration is sideways movement. If it's not seen, then straight out downfall is also possible. We will be activating straight out shorts near the low around 37.77, which by the way looks to be the most interesting or likely scenario given the price action we are seeing. So that's my take on S&P's 500. Interesting trade here. Shorts, longs, shorts, everything followed so far, and now we are interested in selling it with the current sell-off below 37.77, or interest in our current sell-off below 37.77, and long setup also discussed. Next up will be the chart of Nifty 50, and again, I would like to request you guys, if you are interested in further these webinars or more coverage, then definitely hit the like button on YouTube and rocket button on TradingView. Keeps the participation, or what do you call, the visibility of the content high, more views, and hence more participation in the upcoming webinars. And if you have joined in for the first time, I'd like to quickly point out to you guys that we do these webinars every Monday, Wednesday, and Friday. And every Monday, Wednesday, and Friday at 2 p.m. GMT, sorry. So at 2 p.m. GMT, we will do these webinars every Monday, Friday, and Wednesday. And if you are interested, you can join either on YouTube or also on my TradingView handle. So that was my take and about our work. Let's move ahead with the next chart of Nifty 50. So a little bit of update I have done on this count compared to our past analysis. Previously, we were counting the whole leg down as a corrective structure, and it was all right. It did fall. It continued falling. I was able to catch this fall and then this fall and literally this whole move. So today the expectancy was that this market, if it were to reverse, it should show some sign of strength here, but instead it just opened gap down and continued the fall, right? So I had to do reanalysis. Also, when I was trading it, the downward movement seemed not something from a corrective structure. So based on all the deductions which I just talked about, and obviously more of my analysis, I have come to the understanding that most likely this market is following what I think is a impulse in the downward direction. So by an impulse in the downward direction, I basically mean that this market is going to see much bigger downward movement than what we were expecting previously. Right. So if that is the case, which I think is very likely at this point, then firstly, again, we will consider the what do you call simpler scenario that this is following an ABC down. Again, I like to emphasize I'm not of the view that it's an ABC down here, right? Even if it is, so the C wave has shown a little bit more strength than what C's generally do, right? Secondly, let me see, let me do one thing. Let me see if I can find a clear chart for this. Oh no, this one will do. So secondly, what we have is generally we want to see that the E and A have equality, right? So if we measure this wave A down and then C, you will find that it has already touched the equality, right? So that's one more reason that any further down move should be seen as a sign of extreme bearishness in this counter, right? Henceforth, we will remain very cautious here. As I've said already, this leg down is looking very, very bearish to me. And if it's bearish, I already have the bearish count on the screens, right? And it is currently suggesting us that we have 1, 2, 3, 4, 5. Let me see very quickly. 3 here, 4 here, 5. Yeah, so this is suggesting that we have the first leg down, second up, third, fourth, and fifth. So suggesting a minimum one leg down remaining, right? Minimum does not mean there cannot be much more than that. Again, when the counts get updated, there can be more new things or new possibilities that come to light. Now, as I said, the 1:1 has been achieved already. So this leg and this leg, they have achieved the price equality. The further bearishness, I'm assuming, is only possible if we see more continued movement below the 1:1 level. And obviously, we are expecting first a wave force, so we are expecting a pretty decent price action, which will validate our count or invalidate, whatever the case may be. So I would be interested in sell-offs on this market or personally selling, but I'll wait for some price action to confirm my bias. Pretty much self-explanatory after that. Let me see, there are some comments here. Please plot the internals of wave A. I am referring to Nifty. So, hello Ganpati. I'm not sure why would you be interested in that. It's very straightforward. So 1 and 2 and 3 and a 4 and a 5. I mean, like, it's the simplest count on earth is the internals of wave 1 or A. Hopefully this satisfies your curiosity. Right? This will be your higher degree 1, higher degree 2 and higher degree 3. So any further doubts if you have, you guys, on this chart of Nifty? And yeah, guys, again, once more, I'd like to point out that we were able to catch this down move, as I've said earlier. And if you watch our past webinars, you can see me pointing out the downward counts, and not only pointing out yada yada. Yeah, I was actually trading these. There was an exceptional amount of profit I made on Wednesday, specifically in this week. This week was, by the way, all green. All trading days were in big pluses. So that was my take on Nifty, guys. And before we close our discussion on Nifty and move on to Bitcoin, if you guys are liking these discussions, I would request you hit the like button on YouTube, and if you are on trading, you hit the rocket button there. But most importantly, once this webinar is over, I would like you to share this link with at least 3 of your groups or circles. That is, if you have a Discord channel, a Telegram, or WhatsApp, or something like that of traders, kindly share it in that. If you don't have something like that, but you are on Twitter or Facebook, then share my link on Twitter and Facebook, and tag me along, tag trading, hashtag Nifty, etc., etc. You get the point. Keep in mind, guys, these webinars take a lot of time. These analyses, they do not just appear. They can take hours of work. So your sharing is important at this point if you want to see more of this work incoming. So let's head over to the last chart of this discussion, which will be the chart of Bitcoin. Short term wise, we looked at Bitcoin last time and nothing had changed at that point in time. And let's look at it again. So the short term analysis we were following is that this was our point of reference around the price of 15,640, and we were expecting that this market would or is going a ABC correction in the direction, and after which the market would fall. Actually not fall, it had opened itself for downside with that ABC correction. So literally nothing has changed. It is still within that price zone. So still the possibilities of more sideways movement are there, and straight down movement are also there. It has not given us any hint whatsoever. Nothing really to add. Our support regions, as I mentioned so many times, are at 15 to 30, and then lowers were at 14,790 something. So these are the levels where we will look for this market to possibly have a stop. If you want to check the long-term outlook on BTC, go 3-4 webinars back, like in the 14th or 13th webinar, I have discussed it in detail on the longer time frame. So guys, that was it for our discussion on these webinars. And as always, I'll just like to quickly point out again that if you want to check out more of my work, you can visit my website 50is.com, and my 6 years plus track record of 80% plus accuracy. You can check the spreadsheet is here for everybody to view, because this is an outstanding record which is not seen in this industry. Secondly, if you are interested in the video courses, there is the Elliott Wave video course link. This is the personal classes. You can request details, and if you would like to read my book, it is available on Amazon's Kindle platform, Think with the Markets. For instant access, you can just check the links here, or just visit Amazon and type in this ASIN code or the book title itself, Think with the Markets. That was it, guys. Don't forget to like, share, subscribe, and I'll see you guys in the next webinar. Bye.